Hey everybody, welcome back to AWM Insights. I'm one of your hosts, Brandon Averill, and I've got our CIO, Justin Dyer. And as you know, each week we cut through the noise of what Wall Street is selling you to bring you the knowledge, skills, and access you need to invest like a pro. Today, we're going to continue along our theme, and we're going to actually tackle a topic that maybe we should have hit first, but we're saving the best for last. And that's why. Why do we actually invest? So we'll start with the basics and we're going to build it all the way up for you. But as you know, before we do, we're going to recap a little bit about what's going on in the markets.
So we're recording this a little bit earlier in the week than we normally do. By the time this goes to air or is published, if you will, WeWork will have made its final debut on the public stock exchange. It stings though. $47 billion was the initial valuation the company had about 2 years ago, when the CEO was kind of the talk of the town. Money was flowing at them like crazy. And then they did their IPO roadshow and cooler heads finally prevailed and said, wait a second. How are you valuing this company? Anyway, it's been a long road to hoe for them and lawsuits and all that. But they're finally going public at a $9 billion valuation.
I thought all venture capital just went to the moon, though. If you invest in venture, aren't you supposed to just make money?
No, unfortunately, risk and return are related. It's easy to forget, but you definitely need to remind yourself of that before you make an investment. Actually, kind of on that same topic, Jack Ma makes his first trip outside China after the big Chinese tech crackdown. It's been a while. I think it was almost a year or so where since he kind of disappeared, fell off the radar, resurfaced in probably pretty planned, coordinated effort with the Chinese government. Anyway, so yeah, that whole story, as we've touched on, a little bit here and there, the whole Chinese tech story, redistribution and whatnot, is definitely an interesting one to watch. Netflix in the news for a number of different reasons. Dave Chappelle stirring up some controversy with Netflix employees. On the flip side, they had some pretty strong earnings. We're in the heart of earnings season here, and earnings are looking pretty good net. Netflix is no exception to that so far. And then the new hit show Squid Games. I have not watched it, not sure if I will, but I've heard interesting things. Let's call it that. Then, of course, Bitcoin. A new ETF launched in the US. We mentioned that there are far better ways to get access to Bitcoin if that is something that tickles your fancy. This is what's called a futures contract-based ETF, and it will not track Bitcoin dollar for dollar. In fact, it could deviate from the price of it quite significantly. So definitely one of those things, buyer beware. But anyway, on the news, the Bitcoin advocates definitely have bid up that price to new record highs.
And folks, if you don't know what a futures contract is, we probably shouldn't be buying the Bitcoin ETF, just FYI. You need to know what the underlying instrument is if you're actually going to pull the trigger here.
Yeah. And I mean, again, there are way better ways to get access to that asset or commodity or cryptocurrency, whatever we're calling it nowadays. On the positive front and the sports front, MLB agrees to provide housing to the minor leaguers. I mean, that's great news for those guys out there struggling in the minor leagues. Really happy to hear that one.
So that might even, I don't know how this is a lead into to why we actually invest, but we'll take it from there. I think for everybody listening, we kind of went through this series over the past couple of weeks, and I think it dawned on us. We haven't actually taken a step back and said, why did we actually invest in the first place? We've been super tactical. We've talked about the vehicles, who you should get your advice from, when you should actually pull the trigger and make an investment. But we just thought it'd be good to dial it back, because this is probably the most important question is, why are we investing? We so often jump to, hey, I want to buy Bitcoin as an allocation, as an investment, which, as everybody knows, we don't think is an investment, or we want to buy large US companies or small US companies, or, venture or capital or public markets. But really, at the end of the day, I think when you get into the weeds of that subject, if you're not taking a step back and really identifying why we're investing in the first place, I think you're making a mistake, because we all know, and this is kind of kick off the discussion a little bit. I'll let you jump in, Justin, but is that money is just a tool, right? And it's a tool that's used differently for everybody, but it is a tool to help you accomplish your priorities. And so, I think that's where a lot of people really get it wrong, is they start with, hey, I've got a couple $100,000. Where should I invest it? Well, I don't know, because I don't know you. I don't know what your priorities are. And anybody that's giving you advice, to kind of bring in the earlier week's episodes, and doesn't sit down with you and try to figure out, well, what are you actually trying to accomplish? Why are we actually investing? I think it is really giving you poor advice. So I'd love for you to build off of that, Justin. Money is a tool. Where do we go from there? Like, why are we investing in the first place?
Yeah, well, let me hit on something you did say, and then I'll go from there. But it really is important for and in any individual, the individuals listening to this podcast, the individuals who are interested in working with a financial professional, to ask the question why. Your why is going to be unique to yourself. It's not going to be the same for each and every person. There's going to be flavors of overlap and some commonalities and common themes, but it's incredibly important if you're saying, hey, I want to invest, or I am invested, and am I doing it right? This is such an important conversation to really, at the end of the day, make your wealth work for you and meet your priorities. If you're not asking this question, if you're just buying Bitcoin because it's the hot thing out there, buying GameStop back earlier this year because it is a meme stock, at the end of the day, you're doing yourself a disservice. You could be lucky. You could get it right. You could have bought Bitcoin at whatever, $5,000, or you bought GameStop as well, but that is speculation versus investing. And so it's important to really take a step back and also define these two things, which we have, and I'm not going to go down a rabbit hole in that, but investing serves a purpose. Speculation is essentially gambling. Again, you could get lucky, you could really, really benefit from speculation, but it's not investing. And so going back, Brandon, to how you handed it off, why are we investing? Well, at its basic level, you want to invest if you have excess assets, excess money sitting around. You want that money to at least maintain or keep up with inflation, with purchasing power is a term we use, which is essentially keeping up with inflation over time, and not just having your money sit, especially nowadays, this is incredibly true, sit in a checking account earning next to nothing, as inflation is, somewhere around 2-3% in the economy. Your money sitting there is actually losing money over time. That's okay in some cases, because you actually might need access to cash, and there's an opportunity cost or a potential cost of investing that, let's say, in the U.S. stock market, as opposed to keeping it in accessible cash for something short term. But really, that core building block of why is we want to make sure we're keeping or maintaining at least our purchasing power, and then we build from there. Obviously, money is a tool, like Brandon said, and that's where we start to add a lot more, let's call it, nuance to this whole conversation, where money is a tool. Yes, that is definitely the case, but it's a tool to be used in a unique fashion for each and every individual. And that, to Brandon's point earlier, if you have come to us and say, oh, well, I have $100,000, how should I invest it? Well, you have that tool, you have that $100,000. That tool can be used in a number of different ways. You can use it, to build a mansion. You can use it to put food on your table, donate it, whatever it is. And that's where it becomes a nuanced conversation around your priorities and your focus. What brings value to you, and what value do you want to impart on the world?
Yeah, I think that's a fantastic point, right? To think about, because you may have somebody, right, that's got, let's say, $10 million, and their portfolios are going to look completely different because their whys are different. You have one client that wants to be famous, and wants the glitz and the glam and people to be impressed by them, etc. They're going to want to make sure that they can afford that higher level of lifestyle. Kind of conversely to probably what most people would intuitively think, what that means is that their portfolio probably actually needs to be, hopefully they've got enough money to support that, but it needs to be a lot more conservatively allocated because they want that money there for them to be able to spend versus somebody that has wealth like that, but is more concerned with, let's say, multi-generational wealth. And this is who we more often resonate with. Our clients are people that look at it and say, you know what? I've been blessed with having this amount of money, through hard work, and we've earned it, but we don't want it to die with us. We want to make an impact. We want to have a greater impact. That could be multi-generationally through their families, or it could be through, being able to gift during their lifetimes. But at the end of the day, they want to take this tool that they've earned and they want to build it for maximum impact. And how do you do that? You right size your life, and it allows, okay, well, if I only need to consume this tool to a certain level, then everything in excess of that, now I'm able actually to go allocate towards things that will grow over long periods of time. And like we've talked about before, the longer time horizon you have, the more it affords you to take advantage of opportunities that should provide even greater excess returns over time, thus turning into more impact. So it's kind of this cycle. But I think sometimes, at least when I was first getting into this business, it just seemed kind of backwards because the people that, really wanted to consume a lot, I would have thought, well, shoot, they got to grow their money. They really got to grow their money. Whereas, the people that live, let's say, a little in a different way, maybe they're able to take a more conservative approach, but it's actually flipped on its head, kind of interestingly.
Yeah, and I mean, I'm going to go back to this and hit on or repeat the money as a tool analogy. I think it's incredibly valuable to think in that framework, kind of exactly what you were just alluding to right there. When the traditional way of thinking about money and investing is, it's kind of perverted in a way. If you think about it through this tool framework, it should provide you a lot more, let's call it comfort, understanding, appreciation, focus on how your money is invested, because you have that why figured out ahead of time, as opposed to flipping that on its head where your money is invested, just say like, oh, I want to, if you come to us and say, I want to maximize my returns. Well, again, we can't truly answer that question without the why. And if we just go and say, okay, we're going to maximize that return, we're going to put it in a globally diversified equity portfolio, and then at the end of the day, something really important comes up and you figure out your why, well, there's a potential that that tool is not there to support that why, that need, so it's incredibly important to think about the tool, think about what your why is, what impact you want to have in your world, and then we build that portfolio custom to that. And if you understand that, let's call it a virtuous cycle, you should have such a better appreciation for the performance of the assets, the expected performance of your overall portfolio. Why are you holding short-term fixed income or cash in some cases, kind of like I alluded to at the outset, and instead of just comparing yourself to the S&P 500 or Bitcoin hitting new highs or whatever, Tesla and its performance over the last 2 years or something like that. So having the conversation around the why, understanding that the tool, money, your portfolio, is then built to truly support that why in the highest probability fashion, really possible, available to us in the given marketplace, should be an incredibly comforting and confidence kind of building exercise and conversation.
I think that you hit on that perfectly because at the end of the day, the why question, right? What it does, it provides a framework then to evaluate whether you're accomplishing success or not. I think so oftentimes we're picking the wrong benchmark. Like you said, the S&P 500 or the Bitcoin price, like who cares? Who cares? It doesn't matter, right? It really, truly doesn't matter. At the end of the day, what matters is, did I identify my priorities, and were the outcomes towards those priorities what I wanted? That is success. It's that personalized benchmark of really understanding that, hey, yes, this tool I have, and how do I make it for the biggest impact, the best life, whatever you determine your priorities are going to be, and then set up your systems and your portfolio so that way it gives you the highest likelihood of succeeding, of actually achieving those outcomes. I think, we hear it all the time. I asked a prospect this morning. It was like, "What's success to you? What do you?" And it's like, shoot, it was the first time they ever really thought about it, and that we were like the fourth meeting that they've met with these financial people. But everybody throws a portfolio at them. It's like some amount of money, and like, "Oh, you seem like a pretty moderate risk tolerance type person. I think, based on your age, we'll go with the 60-40." It's like, what does that even mean? You know?
Yeah. And again, at the end of the day, the term we've used a couple times here is impact, which could be a big term for some, but it's nuanced, it's unique to you. That impact could be your children. It could just be a charity. It could be multi-generational, which again is something we run into quite a bit, and it's incredibly powerful to think about it in that way. And again, ask the question: what does success look like for you, or rephrase that to what is the impact you want to have? Money is an incredibly powerful tool, and anyone kind of all different wealth levels can have a true impact. Sometimes their circle of influence is a little bit smaller than others, and even some of the wealthiest people want to have an impact, but their circle of influence is just their family. So again, it's nuanced, but there is so much power within this if you think about it the right way. And God goodness, it should be something you get excited about too, right? I mean, like, and light bulbs should be flashing, and it should be a really, really interesting conversation to have, kind of like that example you just highlighted with that prospect, Brandon, where it's unfortunate more people don't frame it that way, because if collectively, let's just say we as an industry or investors truly thought about it that way, I mean, think about the change that we could have. Again, some people care more about the local level, some people care more about the global level, and there's all sorts of different flavors in between. But thinking about impact as opposed to just maximizing returns and kind of chasing fads and getting caught up in the media, it's pretty powerful if you think about it the right way.
I think that's a good point, and probably something we could close on. Is it kind of goes back to one of the conversations on who, right? And unfortunately, our industry is not set up to do this because it doesn't scale. And so you need to find a solution, or advisors really, that are willing to put the time and effort into this relationship with you to help you identify truly what your priorities are and come through with an impact. And I think, that's why we set our business as a family office, because that is a structure that allows you to actually dig in with your clients, to understand what the priorities are, to build customized portfolios. It is really unfortunate that most of our industry is structured in a way that it is much easier to have that risk tolerance conversation and put you into a model portfolio and kind of move on to the next one. So anyways, just wanted to mention, if you are in that position, if you are a multi-generational, kind of have that mindset, or you want to have an impact, whether you have a little or a lot of money, really look for that advisory firm that will take the time to help you develop your priorities and then build out that customized portfolio to those priorities. And, we've talked about it a lot. Certainly that family office model adheres to that or provides for that. So, along those lines, as many of you know, if you head on over to awminsights.com, you can actually download a free giveaway that talks about the value of a family office, how you can actually implement some of these strategies, and then helps you to go out there and find the family office solution that's really valuable and impactful for you. And so with that, until next time, own your wealth, make an impact, and always be a pro.
The information in this podcast is educational and general in nature and does not take into consideration the listener's personal circumstances. Therefore, it is not intended to be a substitute for specific, individualized financial, legal, or tax advice. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a final decision.